My name is Jeff Astor. I'm VP of Business Development here at Broad Financial. Been here 7 years with the company. Author of the company's book, The Ultimate Self-Directed IRA. Really very fascinating title. Took a lot of time to think of that title. Seriously though, the book is nice and it's a very quick read, 2 hours or less. It's meant to get people up to speed very quickly, and I've had a lot of people tell me that it is actually a fun read. So I'm very happy to say that. And today though, we're going to get right to the point with the webinar and get into the elements that are in the book. The book may go into more. Feel free to call us and ask us about getting a book and taking it from there. Anyway, again, so my name is Jeff Astor, and I've been doing this for 7 years, as I said, and in that time, I've either emailed or spoken to some 20,000 people. This is what I do basically, or help people with the marketing and all that. And it's I've seen a lot of amazing things happen in this time. People starting with very little, making a lot, people just having a lot, being conservative, all different types of things. Young people, old people, everything, and then everything in between. So we have a webinar today. Shouldn't take maybe 20 minutes, maybe 30 at the outside, depending, to go through it. And then at the end, we're going to have some questions and Q&A. That seems to be the most lively part of it. So if you have questions, happy to take anything that comes our way, and let's get started. So we're talking about here about the checkbook IRAs and establishing it. So the checkbook IRA is a name. It's not an official name, but it's one of the common names for what we offer. It's also called a self-directed IRA or a checkbook IRA or an IRA LLC. There are essentially two fundamentally different models in checkbook IRAs: custodial and a checkbook. And self-directed IRAs, a custodial and a checkbook again. A custodian, where the custodian holds the money. A checkbook gives you the freedom of the custodian to go ahead and do your transactions. But we'll get into that. Now, who is this for? And I see I'm going to call my director here. I'm trying to change the page, and it's not changing. Brian. Well, don't really need the video, the PowerPoint to be working here exactly. But the question is, who is this for? So we have all different levels of people. Hold on a second, we're getting back on. Great, thank you. So we have, really it's going to be for everyone from rank beginners to very experienced people. Who's this for though? If you're worried about the stock market, we seem to be getting more of those type of people these days as time moves on. Why? The stock market is a place where you can buy invest in stock bonds and mutual funds, and that's great. We know that people have ideas of diversifying in the stock market, but the old statement is that when the tide rises, all the boats go up, and when it goes down, everything goes down. It's very hard to survive in a market that's dropping. One of the ways of doing that is diversification, and the checkbook IRA is one of the great ways of doing that. It's not only limiting it to the stock market, but the idea of a self-directed IRA is the ability to go off of the stock market, out of stock bonds, mutual funds. Not exclusively necessarily, you can split some in, some here, but it's an opportunity that you don't get in your regular Wall Street plan. Another type of person that could be used here is if you want to diversify, and that's what we just discussed, and go into alternative investments. Alternative investments means things not on the market, like actual real estate, a real piece of property. Real estate is by far and away the most popular usage of a plan, but it's not the only usage. People are investing in making hard money loans, tax liens, private companies, cryptocurrencies, precious metals. All these are under the rubric of alternative investments. So some people don't know the difference between a custodial and versus a checkbook IRA. I gave a brief definition at the beginning. We'll go more into that. There are two very fundamentally different types of self-directed IRA models. Here at Broad Financial, we're unique in that we offer both. We have a sister company, Madison Trust, that offers the custodial version, and we have Broad Financial to do the checkbook version. That's a very important advantage that we have, that we're not going to pigeonhole you into one or the other. We're going to listen to your needs and tell you which one is best. Now, if a lot of people feel that they only have a custodial version, so again, that is a limitation, because sometimes a checkbook plan is better, and if you're talking to a custodial company, they're going to pigeonhole you into that plan. And vice versa. You might be talking to a checkbook company and they don't have a custodian, and they're not going to tell you there's a better option here. So that's another type of person that this webinar is for. A lot of times custodians are killing your profit because they're charging you that fee. A custodian in general has something called a fee schedule. See a fee schedule, that's a hint that it's a custodian. In a checkbook plan, there is no fee schedule. It's a flat setup, flat ongoing. there are none of these hidden fees and none of these asset-based fees and transaction fees, which we'll get more into later. Sometimes you have the custodian, it's not the price that's a problem. We do get a lot of people moving over from other custodians and coming into our rubric, whether it's the custodian or the checkbook plan. And with the custodian, there's an extra slowdown in the process, because if you want to make an investment, they have to review the transaction to make sure that it's okay. At a broad financial checkbook plan, we're not going to review the transaction. If you ask us, we will review it and tell you all the legalities, if it's legal or not legal, if you can or cannot do it, but we're not going to demand that you must do it and thereby slow you down. People could be slowed down as much as 3-4 days or 3 or 4 weeks, depending on the company. And I've had people tell me that they dropped the other company and they're coming to us because they lost a big deal because the custodian could not complete the time frame. It could not even approve the deal in a reasonable time frame. A lot of times people, they're okay with the fees, they're okay with the timing of new investments, but the custodian is terrible at customer support. I always tell people that the most underrated component of what you should be looking for, people should be researching for, is a great company, not just a great plan. Because very often, only after you start using the plan, the questions come up. Can I do this? Is this going to cause a problem? And if you do, who do you turn to? So you need a great company to turn to. You might save yourself, first, a very reasonably priced, but if you could save yourself a few dollars here and there, but then you get terrible customer support or no customer support, or they don't know what they're talking about, you could risk tens of thousands, hundreds of thousands of dollars in taxes and fees if you don't have the proper customer support. I always encourage people, do your research. Go, for us, start with Broad Financial reviews. Look at online, don't believe me. Look at the BBB, look at the Google, and don't be limited just to a rating, an A+, which we do have. Go in and look at actual testimonials. See what people are really saying. That's the difference between a real company that you can trust and one that's just a front, perhaps, for maybe a guy in his pajamas, or maybe a company that really is pretty bad and does not value customer support. So this webinar is for you if you want to learn, in short, how to take full control of your retirement account, self-directed where you want, with low predictable fees and great support. These are, I think, what we really specialize in. But the first word there, first set of words, first, full control. This is the ability to actually have your money at a bank of your choice under your control and nobody else's. Broad Financial nor our custodian, Madison Trust, has any control of your bank account when a checkbook plan is set up. That gives you full control. We're here again if you have questions, but the control element is a very unique and special part of our plan. So who are we? How did Broad Financial get started? Basically, we started back in 2004, and the owners and the principals of the company have done very well over the years and continue to do well in real estate. And then when the crash happened, 2008, 2009, one of the parents lost a lot of money in Wall Street. And they said to themselves, why is a parent invested in Wall Street, real estate? I wish we could take the retirement funds and put it into something like real estate, which we know much better. And in fact, at that point, they discovered a self-directed IRA and 401k for themselves. They offered it to the parents, and they did, and friends found out, and then a wider circle of family and friends found out, and eventually they realized in 2009 that they had a whole new company. And therefore, in 2009, Broad Financial started selling self-directed plans. So we've been doing that for a good decade now, and that's, in short, how we came together. And in those 10 years, we've had 10,000 plus clients. We're going to have to change that PowerPoint number. It keeps on rising, and keeps on getting more and more popular. We've got the A+ with the Better Business Bureau and Google, but again, don't trust the rating. Look at actual testimonials. We have a sister company, Madison Trust, that's actually now about $2 billion in assets. So this is a growing company, and this is a growing industry because more and more people are beginning to realize that they have this opportunity, an opportunity they didn't know about. By the way, chapter 2 in my book is how come more people don't know about this. And I get to hear that all the time from people calling in. How come I never heard about this? And I tell them, basically, it's hard to give one reason, but essentially the people holding your money, the brokerages and the financial advisors, are not incentivized to tell you that you have an opportunity of taking your money out of their hands, them losing commissions, and now investing in something that you have full control of. That's one possible reason. But the bottom line is, it's been around, been tested and true. There's actually a Supreme Court case started in 1996 where the IRS lost. These things have been vetted and proven and been used for a long time. More and more people should know about it, and they are knowing about it. So how does this apply to you? So again, to review here, there are many people looking for a company they can trust, that would treat their money as if it was their own parents' money. We really can literally say that. Many people don't know that alternative investments can accelerate their growth and truly diversify their portfolio. People have people telling me, in real estate, I can make 10, 15% more in the market. It's 3%, 5%, 8%. What am I doing in the market? And there are many people that are very unhappy with their current IRA, so they want to move on to a new one. And many people don't know that they can take their retirement money into alternative investments. They didn't even know that they could do it. So these are the type of people that this webinar is for. So who am I? So I already gave gave the secret away here. I am the author of that book. It's got a very concise. You notice a very concise subtitle: Using Self-Directed IRAs and Solo 401ks, which we also do self-directed solo 401ks to invest in real estate, Bitcoin, cryptocurrencies, gold, private businesses, startups, exotics, and more. And it's written in plain English. One of the things I'm very proud about in my book is that people tell me that they really like the fact that I'm to the point, it's fun, sometimes funny, and it's in plain English. Any event, that's the book. It came about because I've been here 7 years now, 20,000 plus client contacts, lots of clients, and that's why I'm standing here today. Now, so what's a self-directed IRA? Let's just take a step back to most basics in case you're brand new to it, and then we're going to build on that, and the end of the question and answers, you'll be able to go into much more detail. So a self-directed, you might find the word self-directed in your general brokerage, or Fidelity's, or Schwab's, or wherever they may say, but that's not what we mean by self-directed. What we mean by self-directed is something much more profound and much broad. Self-directed means the ability to go off of Wall Street, out of stocks, bonds, and mutuals, beyond the Fidelity's and Schwab's of the world, into something called alternative investments. That's real estate, cryptocurrencies, startup companies, notes, loans. Those are examples of alternative investments. Basically, the brokerage is involved in publicly traded assets. So to self-direct means not only to direct it into different types of stocks, bonds, and mutual funds, which is what they often say, is not untrue, but means something much more profound here, the ability to go off of Wall Street. So we have a couple of stories here, there's lots of stories, a few in my book, but there's a couple that I wanted to share with you just to give you an idea of how these things actually work. So the classic case, you hear this all the time, the couple sees the beach house on property and they say, wow, that is something we'd love to retire to, but we don't have the cash now, we're not ready to retire. Hey, but we do have money in our IRA. What about, you think we can buy it now, maybe make some profit, watch the value of the property accrue over time, and then live in it? So the general rule is that you cannot live in the property your IRA buys. And that's the general, that is a hard and fast rule. But it's not, what you can do is you can buy the property, collect rent for a few years, watch it go up in value, and when you're ready, you can take the value of the property as a distribution, meaning you're going to tell the IRS you're ready to pay the taxes on the value, and now you pay those taxes, and lo and behold, you can live in it. What people often do is that they'll do it in a way where they spread out the distributions over maybe several years so that they don't get hit with that one large tax bill. But whatever it is, whether you do it in one lump sum or if you do it slowly over time, when you've paid all the distribution, you've distributed the property, the value of the property entirely, now you can live in it. So you get the best of both worlds. You use your IRA to buy that nice beachfront or lakefront property now, you make a nice profit off it, and then you take a distribution and you live in it. Of course, you could always take the property and sell it and get another, take that money and buy another one and go on and so forth. There's lots of ways to do this. But one of the classic questions we get is the beach story question. And I remember the first time talking to a client about that, and they were so amazed that this was a possibility that they signed up right away. And for all I know, I think it's been a few years. I don't know if they moved in yet, but they were very happy to find out that this possibility existed. Success story number 2, also in my first year here, I spoke to a young lady who had purchased 1 or 2 properties in a college town. So basically the students would rent these off-campus houses, and the students had parents who paid the rent. So it was a wonderful cash cow for her, and certain money coming in because the parents were paying the rent, not the people. She got a nice chunk of money, and then she wondered, wow, I wonder if I can do this with a retirement plan. And she was a young person, but she had already built up a decent amount of money, and she was self-employed, and she had some extra ability to add to her IRA, or it was a 401k, whatever she wanted. And lo and behold, she found out, wow, I can use this to buy the actual, she thought she was done. She didn't have any cash on hand to buy any more. when an opportunity arose, someone told her about the possibility of a self-directed IRA, 401k. She came to us and she said, "This is amazing. I got to tell all my friends." So she, a very happy customer. A lot of success stories. Those are just two of the two examples of the success stories. So here's some common questions people have now. We're going to get to the more specific questions that you might have, but for now, the common questions, that might be the first one is, I never knew that an IRA could purchase property. Does the IRS allow this? So yes, there was an actual case in 1996 called Swanson versus Commissioner. It was challenged by the IRS, the ability to use plans like ours. The IRS lost, went to the Supreme Court, and it's absolutely legal to do this. Anybody that wants the a legal opinion or the legal basis for this, you can email us, and we'll be able to send out the legal opinion. You can look on it on the web. It's not been hidden, and it's there. But the IRS basically ruled, the court case ruled that basically you can invest in everything but collectibles and life insurance. So collectibles, things like artwork, drugs, antiques. Of course, you can't invest in things that are illegal. Cannabis is illegal on a federal level, even though some states allow it. So cannabis is not something you can use your IRA to invest in. Basically, life insurance and collectibles are not allowed, and therefore real estate does not fall into those categories, and neither does almost everything else in the world. Why have I never heard of this before? As I mentioned, that's chapter 2 in the book. I think it has to do with the people holding 20 trillion plus of American retirement dollars are not incentivized to tell you about this. Now, some people legitimately don't know about it. I've talked to such people in one of the major brokerages, and he said he never heard of this. He eventually signed up with us. But many times there are people that might know about it, and or they know loosely about it, or they've heard bad things about it. There's misinformation out there. But for whatever reason, people don't know about it. But it's real. You don't have to trust me. You can do your research. We can send you all the legal timeline and basis of it. But it's been around, and more people are learning about it, and we think a lot more people can learn about it and can take advantage of it. How long does the process take? So we say here generally 2 to 3 weeks for a self-directed IRA. There is a solo 401k, which is faster. It could be a week or a week, 5 to 7 business days. And then there are opportunities to expedite. When you expedite the IRA, which normally takes 2 to 3 weeks, we can bring it down to under 2 weeks. We've done it as fast as a week. There are X factors: who's holding your money, how quickly they respond, did you fill out all the paperwork properly. But generally speaking, 2 weeks is the norm in an IRA. Expediting could get it there faster. In the solo 401k, 5 to 7 business days is the norm. 2 or 3 days, maybe even a day or 2 is possible with the solo 401k. Now, what's the process look like in setting up a self-directed IRA? This is a common question. We actually have a nice video that we put together of the 6 steps that it takes to set up the IRA. So if you understand here, the way it works, I maybe should have mentioned this earlier. In the checkbook plan like we're offering, what we're creating to give you the checkbook ability, the freedom to not have your money at the custodian, is something called an IRA LLC. It's a specialized LLC that can hold IRA funds. So here's the process of how it works. We have a 1-page application to get started. Very simple. We kept it simple. Then in the IRA, you have your name, address, date of birth, and then you're going to give us 3 LLC name choices. We're going to create it. We ask you to do names. We recommend some words not to put in there, words like IRA, self-directed. The more it sounds like a normal business thing, the LLC, the easier it'll be for you at the bank. But you fill out the application. We'll email you out a welcome package with full instructions what to do next. We get back that second round of the welcome package from you. You can upload it to a secure website, and we'll start creating the LLC. We'll create it. You've named it, but you need us to create it because it's a specialized LLC that can hold IRA funds. LLCs cannot hold IRA funds. Otherwise, I get that question. I have an LLC. Can I do this? So the reality is, if you're calling me, obviously you can't. Otherwise, you would know how to create the specialized LLC. Basically hiring us to create the specialized LLC and to maintain it. So we get the paperwork from you. We create the LLC. At the same time, we're going to connect you with our sister company, Madison Trust, the custodian. You're going to tell them where your money is. They're going to contact them and move it over. When Madison does this, it's a non-taxable event. No taxes, no penalties. So 100% of the money you want to be rolled over. Doesn't have to be all your retirement money. It could be part of it. You can move part later, some now, some later, all of it, whatever you want. But it's done through the middle party, Madison Trust, the custodian that is federally regulated by the IRS. They move it. It's a non-taxable event. Once we get everything together, we get the LLC. We're going to mail out a binder to you, thick binder. Some are actually the 401k sticker and then the LLC. But we're going to give you these documents, and in this binder, it's going to have a whole bunch of things. but it's going to have like the LLC documents and the rules, the do's and don'ts of an IRA, and other very valuable information. We've vetted these things. One of the advantages of having a mature, experienced company like us is that this paperwork is been refined over time. So we give you the necessary stuff. We make sure it's in clear English, and if there are things that you're required to do, we give you very clear instructions how to do it. So the fifth step is then you get this binder in the mail, or it shows up in the mail. You take the LLC documents with our instructions. You walk to a bank, and lo and behold, you set up the LLC. At that point, now that you'll tell Madison, you already have told Madison Trust that you want them to either send you a check in the name of the LLC, and you'll walk into the bank with the check of the LLC in hand, or you'll set up the LLC at the bank, and you'll tell Madison wire it into the bank. That could be a little faster, cost a few extra dollars, but that's an option too. Either way, we're going to have, at the end of step 6, you're going to have a bank account in the name of an LLC, and inside is going to be your retirement money. It's going to act and quack and look and walk and talk just like a regular business LLC account. However, the way we structured it, it's all under the umbrella of an IRA. So all your activities inside this LLC are actually tax sheltered, meaning you can make a lot of profit, whether it's from real estate, whether it's from flipping or rentals or cryptocurrencies, whatever it may be. You can make a ton of money inside this LLC, a ton of profit, and you're tax sheltered. If it's a regular traditional IRA, it's tax deferred. If it's a Roth, it's tax free. Same price, same procedure, 2 types of money, but your money is inside this umbrella of this LLC with complete control inside the specialized LLC. That's it. So it takes typically 2 to 3 weeks. Again, we can do it faster. The beauty is that you can take it to a regular bank. You don't need a special bank. There are thousands of banks. Pretty much any bank that's worth a bank, even credit unions set up LLCs. From their perspective, it's another business account. They don't have anything to do with the IRA part behind this. We've done that all behind the scenes. So they're just looking, when you ask a bank, do you do this? You're not asking, do you do an IRA LLC? Do you do IRAs? Do you do LLCs? And if the bank doesn't say that, they're in big trouble. That's pretty much, so it's pretty much any bank you can go to. Again, bottom line is we create this IRS compliant plan, an IRA LLC. It allows you to hold retirement money at a bank of your choice. And through doing this, here's the important part, you gain control. People ask me, do I need the LLC? No, you don't need the LLC. If you leave it as a custodian, but if you want the control, then you need the LLC. The LLC gives you control. Now, this means that by having the control and by having the money at a bank of your choice, you have instant access to your funds. You don't have to wait for someone to approve it. You don't have to wait through a third party to issue a check or send some money out. It's completely like you're in control in the bank of your choice. This gives you the control, the power, and the flexibility that you wouldn't get in a normal IRA, not even in a custodial IRA. So one last thing before we open up the floor to questions and answers is that what is unique about Broad Financial is that we do have a sister company, Madison Trust. Broad Financial began in 2009. We had originally used one of the other custodians out there that had an A- with the Better Business Bureau. We found that the A- was a bit deceptive because there were times they were very poor at customer support. They wouldn't get back to our customers and reflected badly upon us. That motivated us to create our own sister company, Madison Trust. Actually, unlike Broad Financial, we hold 0 assets because we're creating the vehicle for you to take the assets to a bank of your choice. In the custodial plan, they're actually holding your assets. And Madison Trust has a couple of $1 billion of people's assets in their control. To get approval, that took a good couple of years, very tight scrutiny into our principals here to make sure that they could be essentially look like a bank. But Madison Trust is a custodian for IRA funds. And there is an advantage to having both the IRA company and the checkbook company. If you come and tell me, hey, Jeff, I have I'm not going to buy the property and I'm not managing it. I'm not writing checks. I'm not going on site. I'm just giving my money to this fund or this developer or a friend that's going to use this money to invest, and he's going to give me back X amount of profits over a certain amount of pay rate. You just need he sells it. I just need a one-time lump sum. I said, that's fantastic. For that, we would direct you to Madison Trust. It's a $100 setup. It's a quarterly fee. And if you're not writing any other one check, that's it. The thing is, when you start writing checks through the custodian, they do charge, in Madison, they do charge transaction fees. They do not charge asset-based fees. They do not charge based on how much money you have, whether it's $100, $100 million. It's the same fees to set up, and there are transaction fees, though. In a checkbook plan, there are no transaction fees. You buy the property, you pay the bills, you pay the repairman, you pay the landscaper, you pay the contractors. You do that all from your checkbook, and there are no fees for that, no transaction fees. So when you have a check-intensive type of investment, that's when you want the checkbook plan. When you have a one-time lump sum investment, that's where you want the custodial plan. If it's something in between, you call us up and we'll help you sort out which plan is best for you. Great, so that's our basic overview of the webinar. We're ready for the Q&A, or at least I am ready. And Brian and my friends behind the scenes here, fire away. What do we have in terms of questions today?
Hey everyone, so we have some good questions here. First from Sebastian. This came from prior to the start of the webinar. Why can't I just create the LLC myself?
Right, so that's a common question, Sebastian. As I said, and the LLC that we create is not a regular one. It's specialized to hold IRA funds. It conforms to the IRS code that's called ERISA, E-R-I-S-A. Basically, if a person's asking me that, then they don't really know how to do it. If they did, they'd be doing it themselves. An ERISA compliant plan is not typically even done by regular attorneys, even tax attorneys. ERISA is a very specialized field of law, and you have to be an expert in it. We do these all the time. So we've done, we've streamlined the process here, and therefore we keep the costs down. I will want to say on that question, by the way, we have found that sometimes a person calls us up and they set up an LLC through an attorney. Sometimes, and they want to come over to us as the custodian, and I say, fine, send it over here. We found very often, unfortunately, that the lawyer did not write a legal plan, and really, if the IRS finds out this person's funds are going to be in big trouble, probably have to pay penalties and taxes. And other times where they have written a legitimate plan, the person didn't know that this lawyer that he set him up with is not going to give him any customer support. And others are going to give customer support, but they're charging them hundreds of dollars per hour to do so. Broad Financial, Madison Trust, we give you A+, top-rated customer support, toll-free, totally free for the lifetime of the plan. So you really can't beat that. If you do have an LLC that you think is compliant, we're happy to send it over. We'll check it with our compliance department, and if it's compliant, you won't need to pay us to create the LLC, and we'll just connect you with Madison Trust. Again, that's not our experience. That typically is not what happens, but if you have some, feel free to send it to us. Okay, next.
Okay, next we have from Luke. Can I take a loan out against my IRA or have a co-investor?
Right, so Luke, excellent question. So if a person doesn't have the full amount of money to buy a property, let's say it's $100,000, and you have $50,000 in your IRA, so you have a couple of choices, basically two choices. You can co-invest, which means you can get another investor. What people don't realize is that you can be a co-investor with yourself. You can take $50,000 in your IRA, $50,000 from your personal fund, and if that's how you structure the deal from the beginning, you can co-invest those two together into one property. That's one way of meeting the shortfall. Number two is through a loan. When it comes to getting a loan, let's say you need $50,000 loan to make the $100,000 purchase, the rule is that you can't guarantee the loan. What that means is that you can only get a non-recourse loan. So you can talk to us, ask for more details. Non-recourse loans means the lender has no recourse to your personal assets. Banks typically don't do that. They do want to know that you have skin in the game, that if you falter on the payments, they can come after your personal assets like your house. But a non-recourse loan doesn't allow that. So you would need to get a special loan, a non-recourse loan. We do have some non-recourse lenders, maybe 5% of our clients are doing non-recourse loans, and very successfully. And we have some great links, but basically, if you can get a non-recourse loan, great, but that's the only type of loan you can get. A regular bank loan will not suffice. Next.
Actually, a person in the chat had a very similar question to that. He wanted to have non-recourse loans addressed. He feels it's a huge disadvantage. He was wondering if there's any changes or if there's a better lending environment out there. So if you want to touch on that a little more, I'm not sure if there's any more.
No changes. That's been a hard and fast rule from the beginning. The IRS doesn't. The IRS I believe, their intention is to protect you. They don't want you to risk your IRA. They get extra protection from you doing that. And that's a rule that's been around for as long as I think from the very beginning, and I don't expect it'll change anytime soon. Again, the only way around that is to find co-investors, even if it's with yourself. Now, by the way, I've spoken to this a number of times to people who get turned off by the fact that they can only get a non-recourse loan. And I said, did you know that there are other ways to use your self-directed IRA? is such a thing as bridge loans. You're looking for a loan. Maybe you can be the one who's the lender. Lending money in an IRA is a wonderful way of making a profit. And I remember a guy that did this professionally, and he'd make bridge loans for 6 months, charged 10%, whatever he charged. Now maybe he had $500,000 in a loan. He's charging 10% in 6 months. He just made $50,000, and he does it with an IRA. Does very well. So yeah, the non-recourse loan situation is restrictive to some people, and that's no hiding with that, no way around that. Again, you're not limited to real estate. Maybe you'll become the lender yourself, or other ways of using it. But yeah, when it comes to loans, non-recourse is the only situation, because the IRS doesn't want you to guarantee a loan and risk
Okay,
your IRA. Yeah.
great. So next question from James. He understands that you can't do anything such as repairs with in your IRA, but he wants to know, can you personally do maintenance, like cleaning or lawn maintenance with
Oh,
the IRA?
yeah. So what James means is that you can't. People think you this. Let's dispel the first misconception. I don't think James has this, but other people do, which is that when you use an IRA, you can only hire a management company to do all the basic management of the property. That is a misconception. Unfortunately, it's a misconception often promoted by management companies who want you to believe that that's the only way to do it. Not always, but that is unfortunately what we found. You can, in fact, manage your property to a certain degree with a self-directed IRA. You do not have to hire a management company. You can do basically things of a desktop type of managerial nature. You can go on site and collect rent. You can check out the property. You can and you should be hiring contractors, unrelated parties, not your children, not your business, to do the work, but you'll hire the contractors. You can even oversee the contractors. What James is asking is that there are certain areas that are sort of undefined in the law. Can the actual IRA, self-directed IRA owner do little things like maybe change the doorknob or mow the lawn? Obviously you can't pick up a nail and hammer. You can't do the drywalls. You can't do the painting. Can you do little things? Good question, not clear answer. It's a bit of a gray area. We've had discussions in the office about this. Some people say yes, some people say no. If you want to be cautious, you'll find someone else to change the doorknob or whatever it may be. But you can ask us in any specific question, and we can try and guide you in that area how best to do it.
Okay, next. So we have a couple questions that are like this, so I'll try to ask it in a kind of congregate way. Is there a form that they need to file with the IRS each year, income tax return? Can you speak a little bit to the tax
Great,
side of things?
excellent. Right. So since in the LLC is under the umbrella of the IRA, there actually is no taxes, even though it's an LLC. It's a single member LLC, and so therefore you do not have to pay. It's under the LLC is under the rules of the IRA, so therefore there's no tax reporting and no taxes, and certainly no tax reporting inside this LLC. However, there is a report called an IRS 5498, and it's required. It's not a very detailed form, but the IRS wants to know from year to year, what is the value of your IRA? It's cash and it's assets. For instance, if you have $50,000 in cash and you have a property worth $200,000, they want to know that. But you don't have to do it. You don't have to report to the IRS. Madison Trust is going to proactively reach out to you, send you a questionnaire. Madison Trust is required by law to be the custodian, to reach out to you, collect the information, and then submit the information in Form 5498 on your behalf. So you're basically getting a very easy questionnaire from Madison Trust. They're taking it from there, collecting information and submitting it. That's not a tax form, it's a valuation form. You just want to know the value, because there are no taxes inside an IRA, even an IRA LLC for real estate, but there is this 5498.
Okay, great. So next, question about your book. Is there an audio version?
Is what? Yes. So we have, if you go to Amazon, the Self-Directed IRA by Jeff Astor, that's me. You go to Amazon, you should see both a Kindle version, an audio version, I think it's $5.99, and there's a soft cover version, I think $9.99. But yes, you're going to have that choice there. If you don't see it, I just spoke to a lady this morning who had trouble. She didn't want the audio. She wanted something else. She had trouble with it. I don't know. Call us. I have links to each of those three things: the audio, the Kindle, and the soft cover. But you have those three. You have all choices there on Amazon. You should be able to find them easily.
Right. Yeah. Easy read for sure.
Easy read. By the way, the
So,
voice you're listening to, everybody, is one of our marketing people, Alex. Alex,
hello,
thank you
everyone.
for, hey, Alex, thank you for sharing, taking in the questions. And it sounds like you're consolidating them and bringing them down. People have similar questions. You're getting right to the point of what needs to be addressed. Thank you.
Yeah, plenty of eager questions, trying to do my best here. So next we have an anonymous attendee asking, would this work in a solo K or any qualified plan structure in a dual managed member? Okay, this question's a little confusing, so I'll just read it as is and you try to decipher it, Jeff.
Okay.
Would this work in a solo K or any qualified plan structure in a dual managed member 50/50 LLC?
Well, when we create the solo 401k, which I really didn't talk about today, we create a trust. You need an LLC or some sort of self-employment to qualify for the solo. We create a trust, and the trust first can be combined with others, and it's possible to put multiple people inside the trust as well. When we do in an IRA, we get this often. A husband and wife, for instance, he has 50,000, she has 50,000, they have a $100,000 property. They can have two self-directed IRA LLCs, pay twice, or they can have one dual member IRA LLC with one LLC but two people, two IRAs in it, or multiple IRAs in it. There are you save some money by doing that, but there are certain disadvantages in terms of taking out distributions or contributions. You'll call us if you have that situation. We'll lay out all the pluses and minuses. But there are lots of ways to combine with others, whether it's an IRA or a 401k, and we'll be happy to address any specifics if you give us a call.
Okay, next is from Catherine. Could you please explain the process for how you transfer real estate, like such as the beach house example, to yourself after you take the distribution of the value of the house?
Right. So let's say you get the house is worth $100,000 and you owe $20,000 of taxes on it. You pay the taxes, and now, well, it's the same idea, Catherine, as with cash. You have $100,000 in cash in your IRA. You know what? I'm ready to live off that 100,000. You tell the IRS, I am ready to live off that 100,000. So you pay them $20,000 in taxes, or whatever the amount is, and now you have $100,000 in your bank account that you can use. And it's now taxable money, but you could use it as you wish. There's no IRA restrictions. You can go to Vegas, you can go to Paris, you can spend it on grandkids, whatever it is. So it's the same idea with a property. The property has a value. You find out what that value is. You call us about how to find out what the value is. Usually you might not necessarily need an expensive appraisal. It could be a comp, something on a local realtor's letterhead. You'll call us if you have questions about that. But you find out what that property value is. You tell the IRS, here, basically you'll tell us. You'll go to Madison Trust and say, I want to take, let's say it's a $100,000 value. You tell Madison Trust, you go to the website, I want to take out a distribution of $100,000 value on this property. The IRS says, okay, you owe us $20,000 in taxes on this property. You pay the IRS. Now the property, instead of being under the title of the IRA LLC, you can transfer it to your own, and now you can live in it. Hope that answers the question.
All right, thanks, Jeff. Everyone, this is Brian. Thank you for sending in all your questions. I just want to let you guys know that we have over 40 questions in the queue still to be answered. We do have a hard stop at the top of the hour, so we'll try to go through and answer as many questions as you have. But if we don't get to your question during the webinar, we will email you the answer. But you also feel free to call in or email us at info@broadfinancial.com, and we will answer your question. I just want to make sure that everyone knows that every question will be answered, whether we get to it in this webinar or not.
Yeah.
Okay, Alex, take it away with the next
Oh, by the way, so we've been doing these webinars for a while now, and people have really, the general webinar has been very helpful to people that are new to it. But the Q&As have been very interesting, a whole wide variety of questions. We've been talking about possibly just putting up the Q&As of different past webinars. So again, if your question isn't here, you'll call us, you'll email us, and we hopefully will have more information of typical Q&As from past webinars as well as this one.
Great. So next question is from David. Real quick, by the way, Emily in the chat asked a very similar question to the last one you just answered. So I hope that was answered, Emily.
Okay.
So David asks, do you recommend a IRA LLC or IRA trust account, and do you offer both?
Good question, David. We are for various technical reasons, we have not, and people do not offer IRA trust accounts at this point. 401k is a trust. That may change in the future, but for right now, the only one we would offer is an IRA LLC.
Okay, next question from Jacob. With the LLC, do you need to refile every year with the state like any other LLC?
Right. So some states do have. By the way, not all states have filing requirements. Many do not. But if your state does, yes, you would have to refile the. If they have a fee, you'll have to pay the fee. If they have a filing requirement, you have to pay the filing. You have to do the filing. But the filing is not for the sake of reporting taxes. It's some states just want you to fill out some forms. So whatever your state does, generally speaking, you're still going to have to do it here, even though it's an IRA LLC. But again, the tax part of it, or tax reporting part of it, that would not be necessary.
Okay, next question. This one is from Chris. Under the IRA LLC, can I make regular contributions? If so,
Yeah.
what's the annual limit?
Right, so IRAs, it's just like in any other IRA. It's just now you get the ability to go off of Wall Street into things like real estate. So these days, IRAs, if you're under 50, you can contribute $6,000 per year. If you're over 50, it's another extra $1,000, $7,000 per year. If you're self-employed, there's something called the SEP IRA, then it's $56,000 per year. So these are the same contribution ceilings of any IRA, whether it's a Wall Street IRA or ours. Yes, you can make these contributions, and the limits are no different than any other IRA.
Okay, next question's from David, and it's in the same vein as the previous questions about keeping the property and paying the distribution. So I hope we
Well, yeah, listen, we can
everything.
only answer these in a general way. We have salespeople and reps and the toll-free number. So if you have any more specific questions along those lines, I'd encourage people to call in and ask their rep and get direct and specific answers.
Right. Okay, next is from Joseph, and he asks, if all my IRA is invested in equities, once the LLC is set up, can I transfer the equities into a brokerage account under the self-directed IRA LLC?
Well, no, you can personally, we can transfer over, you can transfer over cash to us. You can transfer over things like real estate, assets in kind, but the actual equity positions, no. You would have to sell them. However, most people, what they do is if they have some positions in the market that they like, they'll keep that there. And they'll only sell what they need to buy the property, let's say. So you cannot we do not, and you cannot roll over actual stocks, bonds, and mutual funds, the actual positions. They'll have to sell those, get the cash. But you don't have to sell everything. You have freedom to choose what to cash in and what not to cash in. And we do have some clients that have set up our LLCs at the brokerages. Some brokerages are more user-friendly in that area. This doesn't mean that you can move the equities into there, but it means that once you have the LLC set up at a TD Ameritrade, for instance, you can have the IRA LLC issue a check to buy a property, or you can have it, hopefully, to just go ahead and buy your equities on TD. But that doesn't mean you can roll over the existing ones. Again, that's not, you have to do that through our custodian. They do not roll over the equities to position.
Okay, next is from Lyle. I have a checkbook Roth IRA with Broad Financial and Mass and Trust. Oh, great to hear, Lyle. Can I write a check from the LLC to the IRS for the taxes I owe from the rollover?
No, that usually is paid by, double check and call into the support, but basically that is paid from outside the IRA.
Straightforward. Thank you.
I don't know, the whole idea of a Roth is to not pay the tax, you just get tax-free money. I don't know why you'd want to use it for that anyway, but if you did want to, you might have a legit reason. Maybe there's not being short on cash. Double check with us, but probably not.
Okay, this next one is from Alan. Can you transfer an existing owned property by a taxable account to the self-directed IRA LLC, or can you only put new acquisitions into it?
Yeah, good question, but the answer is no, I'm afraid not. If you have a property that you bought with regular taxable non-IRA money, it can't be moved into the IRA. Same reason you can't take you have a savings account of $100,000, $100 million, whatever it is, $100,000. You can't say, hey, I'd love to put that into a Roth. Let me just pay the taxes and turn it into Roth. No, IRA is money that you've collected or generated over time from your earned income. It can't be just from a savings account. Same thing same thing just as is true with cash is true with an asset like a property. So I'm afraid you would not be able to take the property. You can buy new properties in the IRA and sell them and inherit them to kids even, but you cannot take a non-IRA property and just put it in the IRA.
Okay, Alan got another one for us. If you are a co-investor with yourself, can you allocate depreciation differently between the taxable and non-taxable IRA accounts?
Very detailed question. I mean, generally, yes. I mean, as I understand it, at least from your question, the portion of your investment that's not IRA, you pay taxes on, and you can take deductions on. Double check with us or your accountant, but I believe that would be the case. And what he's talking about is that you buy a house 50% IRA, 50% non-IRA. We always tell people in an IRA, there's no capital gains. But just as you're not paying taxes on any gains inside the IRA, you're not allowed to take any deductions. If you have a split 50-50, so in the part that's not IRA, in theory, it should work that you are paying taxes, but maybe you can take deductions. Again, discuss with your accountant and double check with us and to be sure, but that would be the general rule.
Next question is from Tara. I already have a solo 401k account set up with Broad Financial. Once again, great to hear. I would like to shift my money from one bank to a local credit union. How do I move my money and how do I present this to credit union so that they are open to setting up this account?
Yeah, Tara, so basically I would encourage you to call that 800 number and ask for customer support. They'll help you with the technicalities, but it's essentially setting up another account at the credit union. Same account you have at the bank, you'll now go to the credit union, set up an account and transfer over. If you have assets, actual assets to transfer over, not just cash, definitely make sure you talk with us at customer support. But if it's cash, it's just sending to another account and transferring the money between, following the proper paperwork. But again, I encourage you to call support to work out any of the details.
Okay, next question is from John. I opened my self-directed IRA trust bank account. I am now ready to roll over my IRA funds into my self-directed IRA LLC at my bank. Do I need to contact Madison Trust first, or can I just roll it over on my own with a wire transfer?
Again, I encourage you to call support. Every situation might have a little difference, but basically, there are if you have a qualified funds like 401ks, 403bs, non-IRA funds, essentially, you'll be filling out the paperwork at the financial institution that's holding your money now. You'll fill that out, and they'll roll it over to Madison Trust, who will send to the LLC. It has to go through Madison Trust. That's what the IRS wants. Why is Madison Trust there? The IRS wants some federally regulated, trustworthy entity to know what's happening with your IRA money. If you want to move money from a current institution into the LLC, that's fine, but it's got to come through Madison Trust. Whether you fill out the paperwork yourself or Madison contacts them on your behalf, depends on what type of funds you have. But yes, even if you can't just take your money from your one institution and put it in the bank. It's got to go through Madison Trust, and that's an IRS requirement. So they have a pulse on where your money was and where it's ended up.
Next question is from Douglas. Douglas is retiring at the end of the year from federal service after 24 years.
Congratulations, Douglas.
Yes.
Big A for Douglas, everybody. Okay.
He has a pension and a TSP thrift savings plan. He also has funds in a Roth. He's established flipping real estate and in the rental business. He wants to know, can I use the Roth and invest in a checkbook IRA?
Yeah, you absolutely could, but you have two different types of money. Your Roth money is one type of money, and your pension and TSP money is not Roth. It's not traditional money. So you can use either or if you want to use both, you'll need two IRAs from us, one for the Roth and one for the non-Roth. But you can roll either or both types of monies into two. If you do both, it's two plans. If it's one or the other, certainly you can roll your Roth money into one of our plans and start a whole IRA rental or business or flipping business as you see fit.
Okay. Next question is from Ray. If the LLC invests in property overseas that does not recognize the LLC entity, how do you A, title the foreign property, and B, under what entity do you pay the overseas tax on rental income since you're not paying U.S. taxes on it?
These type of questions, I really advise you to call in and ask specifically. We can talk about this in a general way. It's a novel idea. So many people that you can use your IRA to invest overseas in property or whatever it is, are allowed. We do have clients doing that. Every company has a different rule, so it's really varies. We don't know the company. We don't know the rules in Belize. We don't know the rules in Mexico. We don't know the rules in Paris. We don't know the rules in Australia or in India or in any of these places. What we know is that you create the IRA LLC in America, and you're allowed to wire the funds to that country to acquire the property there, for instance. So I know from customers that tell me, and I think it's Belize or was it Mexico, whatever it is, certain places have the equivalent of an LLC, some sort of legal entity is set up, whether it's France or wherever. I can't imagine that a civilized country doesn't have some sort of legal structure that's their equivalent of the LLC. And generally speaking, the parties in the country where you're trying to buy an investment, they'll know what that is. You should be able to wire the funds from your American IRA bank LLC account overseas. It could vary from country to country, and any specifics can I really advise that you give a call to customer support here and hammer out the details. Next.
Okay, we have one from Joseph, and it's, once you are ready to start taking distributions, is it as simple as writing a check to yourself?
Well, no, almost. Basically, you have to go to Madison Trust. Yeah, again, everything has to be done through the custodians. Madison Trust has a distribution form. You fill out the form. You're going to basically take the check from your LLC, send it to Madison Trust along with the form. They'll record it and send back the money to the LLC. It's a little bit roundabout, but that's how the IRS knows what you did, and that Madison Trust is reporting that you've taken a distribution.
Next question. Can I lend money to a business I have ownership in?
Nope, absolutely not. I mean, call us if you have less than 50%. If you and any disqualified persons own 50% or more of the business, absolutely not. If you own less, it's possible to invest in the part that you don't have, but you cannot loan your own business. Which brings up a point. I actually I should have mentioned this earlier. One of the common questions is people are intimidated by the term prohibited transactions. They've read on the internet that you could make mistakes with checkbook plans. It's very easy to make a mistake and all that. And I tell them this, they're really, if you call us and are in contact with Broad Financial, we'll guarantee that you'll stay within the rules and you follow what we say. But there are 3 general rules that you should know about, and I can explain them in 30 seconds or less. Let's give it a try here. Number 1, don't buy a property you already own. You own it, don't use your IRA. Even if you owned it once and sold it to somebody else, that's called a step transaction, not allowed. Number 2, you buy a property that you never owned, that's fine. Now you want to make personal use of it. You can't sleep in it. A guy wanted to buy a ski lodge in Colorado. He would just come out there once a year to ski there. No, wouldn't be allowed because that's personal use. So that's rule number 2. Number 3 is disqualified persons. You, the definition of you extends to you, your spouse, children, grandchildren, parents, grandparents. Vertical, in other words, lineal ancestors, descendants are off limits. To the side, brothers and sisters are actually okay. You can buy a house. Your IRA can buy a house from a brother or sister or aunt or uncle, niece or nephews. Those are fine. So those are the 3 rules. Don't buy the property you already own. Don't make personal use of it. And know who the disqualified persons are. If you have questions, you call that. You now are an expert in prohibited transactions of IRA LLCs. At least you know enough to know what to ask us if you have a question. But the rule is, though, is that since he wants to make an investment, the question was, can you make an investment? Use your right to invest in your own business? No, that's a prohibited transaction.
All right, Jeff, thanks. We're winding down. We have 5 minutes left, so we probably only have time for a couple more questions. But again, anything we do not answer, please feel free to call us in, but we will also try to respond to your question via email. So Alan asks here, I believe you have addressed this, Jeff, but I think it's worth ringing home. Is a self-directed IRA or 401k have any increased IRS audit risk? If so, would you mitigate the risk?
Excellent question. I was not asked before here. So we have a lot of experience doing this 10 years, 10,000 plus clients, and we can tell you very confidently that it has never happened once that any one of our clients has ever been audited because they have an IRA, LLC, or checkbook IRA. There's disinformation out there about that. And I say disinformation, I don't mean misinformation. Disinformation that seems to be intentionally distorted information out there. It's very frustrating to read such things. We have never, not within us, and we've never seen anywhere outside that anyone has ever been subject to a lawsuit because they were flagged for an IRA LLC. Now, a person could get audited, and it does happen. 3% of the population does get audited. We know of a few clients that have been audited. I know this because they told me. They said, Jeff, your plan passed with flying colors. We're so happy that we got your plan. It's legal. The IRS checked it out, went with a fine tooth comb, and it was fine. So number one, we have no evidence, and certainly never within our purview has anyone ever been audited because they have an IRA LLC. It doesn't raise a red flag. And for those few that we know that have been audited, it's passed with flying color.
Okay, next question is from Dan. With some IRAs or 401ks, there's the possibility to establish a loan to yourself, which you would pay back into the account. Is it possible to do this with a self-directed IRA?
Not with a self-directed IRA, but with a self-directed solo 401k. Unlike the IRA, the solo 401k has a loan feature. By the way, I just spoke to this person this morning who told me that she was searching around in solo 401ks and she was under the impression that you don't have a loan feature. But I said it's possible because not all solo 401ks are the same, but we call ours the ultimate solo 401k, which means that we wrote into the rules the maximum that the IRS allows. So one of the things it does allow is this loan feature. This other person has been researching solos that don't. So ours does have the loan feature. The loan feature is only in a solo, it's not in an IRA. You can take out 50% of the account capital at $50,000. You have $100,000, you can take out $50,000 as a loan. You have 5 years to pay it back. You pay it back quarterly with a little bit of interest. Make it 20 in 5 years. Quarterly is 20 payments. You make it equal payments over 5 years. You can pay it back early without penalty. The interest is around the prime rate, give or take a half a point. And that's interest is money to yourself. The IRS is actually worried you're paying too much interest to raise your retirement artificially. But basically, you got 5 years to pay it back. It's only in a solo 401k, and then a personal loan means that you can do anything that's otherwise restricted. You could go and pay off your mortgage. You can go, pay for the kids' college tuition. I just found out. I don't know if I used to think 50,000 covered the tuition from year to year. Now it's over 70 in some places. Whatever you need. Vegas, I don't recommend using Vegas. As long as you pay it back, you can take out the loan. That's not true in the solo 401k or IRA at all, because in general, only in this personal loan feature of the solo, you can do so. You can make loans in the IRA as an investment to somebody and get back some interest. You can make loans in the solo 401k to other people and get interest, but if you want the personal loan feature, that's only in the solo 401k.
Okay, great. This will probably be the last one. Kaylin asks, how long does it take to set up a checkbook IRA?
Okay, Kaylin, so typically it's around 2 weeks. We do have expedite options, and there are cases where it takes a little longer depending on who is holding your money and other factors. Sometimes in December, you should know, we've had some delays because UPS was overwhelmed. So you got to be careful. We have to be careful of saying, generally speaking, 2 weeks. Expediting, though, we have a wonderful expedite program. We don't charge you expediting, but we do we do the option to pay a partial payment to start the plan and the balance out of the rolling fund, or you can pay in full. So if you pay in full, we're going to automatically expedite and overnight your plan. So that's an opportunity, and therefore we can usually do it often in faster than 2 weeks. But in general, the idea is 2 weeks in an IRA, and hopefully not longer.
Okay, everyone. That's all the time we have for today. Like I said, if we did not get to your question, there are a few that we left here that we could not address. Please feel free to call in, ask us your very specific questions. We will answer all of them. Particularly Raymond, Franklin, Trang. There are questions that I would like to answer for you. So we'll try to get back to you on that. But if not, please feel free to call us in, and we will answer all of your questions. So again, everyone, thank you very much for attending. I feel like this was very enlightening. We're going to be doing many more of these going forward, and I hope you found this as valuable as I did. Jeff, any other sign-off words?
Thank you very much. Again, the book is The Ultimate Self-Directed IRA. Great way of getting information. Even if you know a lot, it's a good review here. And it's a quick read, nice and thin. You got an audio version, a Kindle version, a softer version. Just go to Amazon, type in The Ultimate Self-Directed IRA or Jeff Astor. You should be able to find it. And if you have any questions, give us a call. I look forward to hearing from you. Thank you.
Everyone, don't forget, we have 10% off of our plans. It ends tomorrow. So if you call in or you apply online, you can get 10% off of your setup fees for a IRA or solo 401k. So we encourage you to do so, and we'll talk to you guys soon.
All righty, thank you.